Morning, Steve Free in Chicago with the morning grain comments. Well, overnight, price was a little bit lower. Beans down about a penny, corn down 2 to 3 cents, and wheat down 4 cents. Stock market's a little bit higher. The dollar is higher about crude, and gold are lower. I think overnight, the big question about the marketplace is that over the next 2 weeks, it looks like U.S. Midwest will see normal rainfall. The rainfall might be best across the southern part of the Midwest, especially east of the Mississippi. But that'll give everybody a drink of water. I think yesterday, whether you're in Nebraska, Iowa, Minnesota, Illinois, Indiana, everybody was saying the same thing. The crops need a drink of water. West of the Mississippi is where the best crops are, and their crop conditions are still very favorable. But right now, everyone would need a rain. This week's winds and heat really stress like North Dakota, Nebraska crops. And so this change is welcomed. Probably not welcomed for prices, but welcomed for the crops. We'll be getting ethanol data today. It should show continued slight increase in production and drawdown in stocks. We're still not at the levels from a demand standpoint that we were pre-virus, but it is offering a stronger basis to the processors. Farmers, though, still aren't happy with the nearby corn price and still remain reluctant sellers. Tomorrow we get export sales, and we would assume that corn and wheat sales will remain below the pace needed to get the USDA numbers, and that soybeans will be close to the pace, but still behind USDA's goal. We have seen a drop in crush margins in China, US, and South America, and we'll see if that impacts the demand for beans for crush. In the corn market, we're in a carry where the nearby contract is lower than the deferred, which means that really the market doesn't need all the supply from the farmer that he has to sell. Soybeans are flat, which means bean movement needs to be consistent to satisfy the demand, especially on the crush side. Wheat yesterday took a hit, and we're now trading below the psychological support level of $5 in Chicago because of Russia announcing they will not extend export quotas into July and may not talk about quotas until January. This and harvest pressure is beginning to weigh on the wheat market futures. We also noted yesterday, we were kind of surprised to hear that down in Kentucky, wheat farmers that are beginning to harvest wheat there, we're expecting 80, 90 bushel yields, and they're getting 35, which means the freeze damage down there may have been more than what people had thought. The outside markets, we're still watching the new cases of virus in Beijing, and that they've canceled 6% of domestic flights in and out of Beijing and closed the schools again. So we'll see if that has any impact. The Fed chairman continues to talk about more stimulus down the road, and that the economy is going to take a while to get back to normal, but he's confident that eventually it will. We're also watching European stimulus and stimulus around the globe to try to shore up economies as we get through this virus thing. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.